Markets have plenty to digest this week, but one theme stands out, and that's the US dollar's weakness globally. That's sending major currencies up and gold and silver to fresh record high levels. In the equity space, the technology is doing quite well this morning after the Dutch ASML announced a major beat on its actual bookings. Elsewhere, the Fed is preparing to announce no change to its monetary policy today, even if it means making the White House angry. While some of the big tech names in the US will be going to the earnings confessional after the bell today. But overall, appetite in US becomes vulnerable as allies are diversifying, deals are being signed, and capital is finding new routes. So, welcome to Swissquote's Daily Market Talk. It's January 28th. I'm İpek Özkardeşkaya and I will try to connect these dots in a minute. But before I do, please keep in mind that opinions are my own and this is not financial advice.
This show is brought to you by Swissquote.
So there are a lot of major stories on the news today and a lot of market moves as well. But the most significant and the most impactful market move of this week, of these days, is undoubtedly the very sharp sell-off that we see in the US dollar that sent the US dollar index to a 4-year low level yesterday and continues to push gold and silver prices to fresh record high levels. Trade and geopolitical uncertainties regarding increasingly unreliable American friend and ally, and the worries regarding what will happen to the Fed's credibility when Jerome Powell will leave. It will fly out of the window, spoiler. While these factors continue to weigh heavy on the US dollar, along with the latest US consumer survey that actually showed a sharp drop in US consumer confidence and the way people see the current situation, and a very sharp drop as well in the share of consumers who expect their income to increase, accompanied by a steady rise in the share of those who say that jobs are hard to get. So the US is experiencing a two-speed economy today. Main Street versus Wall Street and AI, but the latter will hardly convince the Fed to pull the interest rates lower today or in the coming months. Jerome Powell will likely avoid political commentary and keep the focus firmly on economic data to justify monetary policy decisions today, of no change probably. On the other hand, we all know that the US president is waiting just outside the room, and anything he might say about the Fed's decision and about how much he dislikes Powell and his policies would only make matters worse for the US dollar, much to the delight of gold and silver longs obviously. But you know what? With or without buzzy headlines, the US dollar looks condemned to weaken. The only comfort here really is the fact that the US inflation has simply not taken the lift due to the US tariffs since last year. That's certainly because importers in the US built stockpiles to buy time, but also because only 20% of the tariff threats have become effective since November 2024, according to Bloomberg. Only a fifth of the US tariff threats since November 2024 became true. So the famous taco trade, Trump always chickens out trade, does have a concrete data backing today. And this is certainly why the Korean stocks didn't care much when Trump said that he will impose 25% tariffs on Korean imports, because they have not yet codified the trade deal that was reached last year between the US and Korea. That deal actually includes a $350 billion US dollar worth of investment in the US from Korean companies, which is a massive amount together, mind you, even more so as the Korean won is plunging these days. So as a result, Koreans said that they will have to hold off on their pledge to invest as much as 20 billion US dollars in the US this year. Furry in the White House, how dare you think of your own interests before the US, right? The result, the US said it will pull its military support from South Korea, and North Korea fired a volley of ballistic missiles to celebrate. Anyway, I don't want this to get political, so let's stay with the Kospi index. Kospi is up today to a fresh record high again, with SK Hynix continuing its free solo climb, boosted by the news that they become the exclusive supplier of memory chips to Microsoft's new AI chip. Elsewhere, after a year of this tasteless trade burger, right, US ex-friends and allies have had enough. Remember, last week, Canada has signed a kind of trade agreement with China. It's not a free trade agreement, mind you, but it sure relaxed rules between the two countries on some controversial and critical areas like the Chinese EV exports, for example. Then this week, Europeans signed a trade deal with Mercosur and another one with India after more than 2 decades of negotiations. Funny, huh? How a common enemy, a common adversary could change things so rapidly. Ursula von der Leyen in Europe called the Indian deal the mother of all deals. This one actually leads to the elimination of more than 95% of tariffs on both sides. And it includes cars, industrial goods, wine, pasta, chocolate, and more European goodies that 1.5 billion Indians will get to enjoy without tariffs. The news are great, and they would be even better hadn't LVMH announced dropping sales the same day. But oh well, the Stoxx 600 index still closed yesterday's trading session close to a record high level, with the European defense stocks leading gains, of course, as Europeans will continue to invest massively in their own defense and technology to survive this painful divorce with the United States. For the military stuff, Europe has got good players. For technology, it's more complicated. It will take some years to build alternatives to the US big technology services, for example, but we start seeing progress in some areas. This week, for example, for the very first time, the EU switched on parts of its homemade secure satellite communications network to replace the US-made Starlink in an effort to move away from the American stuff. National security demands, you know. And we will probably see these efforts to get stronger as the US threat gets bigger. Speaking of European tech, ASML, which is the biggest European technology company and the one and the only company in the world that provides machines to build the most advanced chips, announced its last quarter earnings this morning, and the results look good. The company printed a small beat for both revenue and profit, but a big beat when it comes to its actual bookings. We're talking about 13.2 billion euros of actual bookings. That's 2 times more than what analysts expected, highlighting a strong forward demand, especially for the EUV technology, for which this company is the only provider on the face of this earth. So European futures are up at the time I'm talking here this morning, while Nasdaq futures are leading gains among major US indices, as ASML results will be boosting appetite for the US big technology stocks before they go to the earnings confessional shortly. Meta, Microsoft, and Tesla will actually be revealing earnings after the bell today. For Microsoft, we will be watching closely the Azure cloud growth, revenue from AI products, and any update regarding their data center and AI spending plans. For Meta, we will be watching the spending plans. Really, I don't like Meta's business model of transforming social media platforms into random AI-generated video platforms, but some people like it. If it brings in advertisement revenue, good for them. But again, I'm not really convinced, and I don't think that their model will become a game changer for the future of the technology, but hey. And for Tesla, well, focus won't be on the plunging car sales, happily, but the speed at which they are looking to expand their robo-taxi business and the timeline of the most expected Optimus robots. But Elon Musk said the production will be painfully slow, remember? So I guess that the market's reaction will depend on Elon Musk's convincing capabilities rather than what the company concretely delivers. So let's see, it's going to be exciting, but this is all for today. I'm İpek Özkardeskaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below, as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.